Every major AI company just lost $30 billion in market value in a single week, and China might have just triggered the collapse everyone said was impossible. DeepSeek R1 dropped on January 20th, and within 72 hours the entire AI investment thesis cracked wide open. This wasn't just another model launch. A Chinese lab with a $20 million budget built something that matches GPT-4 performance at a fraction of the cost, using the older chips that were supposed to be too weak for frontier AI. The moment those benchmarks hit Twitter, Nvidia lost $200 billion in market cap. Not because DeepSeek was slightly better, because it proved the emperors had no clothes. Here's what nobody's saying out loud. American AI companies have raised over $300 billion in the last 18 months on one core promise: that building cutting-edge models requires unimaginable compute, and only they can afford it. Jensen Huang stood on stage and told investors you'd need 100,800 chips to stay competitive. OpenAI burned through billions. Anthropic raised at an $18 billion valuation. Google panicked and overhauled everything. The entire pitch was that AI is a hardware moat business. Then a team in Hangzhou spent less than what a single Silicon Valley VP makes in salary and released a model that performs identically on most benchmarks. The technical details matter here. DeepSeek used a mixture of experts' architecture and something called multi-token prediction to train efficiently on limited hardware. They documented everything openly, published the methods, released the weights. This wasn't vaporware or a marketing stunt. Developers immediately started running ULs. The reasoning benchmarks came back legitimate. It handles code, math, long context tasks, and it costs 93% less to run per million tokens than comparable American models. That's not incremental improvement. That's a different cost structure for the entire industry. Wall Street is finally asking the right question. If a constrained Chinese team can do this with export-controlled chips and a shoestring budget, what were we funding? Microsoft spent $13 billion on OpenAI. Google and Amazon poured billions into Anthropic. Meta hired 10,000 engineers. Startups raised at billion-dollar valuations to build wrappers on top of foundation models. The bull case depended on AI being capital-intensive and proprietary. DeepSeek just made it look like software again, where the best engineering wins, not the biggest checkbook. China's advantage isn't just scrappy execution, it's structural. Chinese AI labs face export restrictions, so they had to innovate on efficiency from day one. American companies had infinite access to the best chips, so they scaled vertically. Throw more compute at the problem. When you can't brute force with hardware, you get creative with algorithms, and that's exactly what happened. The irony is suffocating. U.S. restrictions designed to cripple Chinese AI development accidentally forced them to build a more economically viable approach, while American firms burned capital, assuming the moat was hardware. The bubble mechanics are textbook. Investors poured money into AI because the narrative was simple: infinite scaling laws, winner-take-all markets, and only a few players could afford to compete. That narrative justified insane valuations. Character AI raising at $1 billion, Inflection raising $1.3 billion then failing. Adept, Cohere, dozens of others raising hundreds of millions with no path to profitability. All of it rested on the assumption that models were expensive to build and therefore defensible. If DeepSeek's approach generalizes, and early signs saw it does, then most of these companies are holding overpriced infrastructure and no competitive advantage. This isn't about China versus America. It's about what happens when an entire sector misprices risk. We've seen this cycle before. Dot-com bubble, clean tech, crypto. Capital floods in, valuations detach from fundamentals. Then a forcing function appears that reprices everything. For AI, DeepSeek is that forcing function. Not because it's the best model ever made, but because it shatters the cost assumptions that justified the spending. If you're an enterprise customer, why pay OpenAI thousands per month when you can self-host a comparable model for pennies? If you're an investor, why fund another foundation model company when the barriers to entry just collapsed? The counter-argument is that American models will still win on absolute performance. That DeepSeek is good but not great. That reasoning improvements matter more than cost. Maybe. But markets don't care about a maybe. They care about margin compression and competitive dynamics. The moment a credible low-cost alternative exists, pricing power evaporates. OpenAI already slashed API prices twice this year. Anthropic followed. Google's racing to undercut everyone. This is the beginning of commoditization, and commoditized markets don't support venture-scale returns. The AI bubble isn't popping because the technology failed. It's popping because the economics just shifted under everyone's feet. And most investors are still holding last year's thesis. DeepSeek didn't just build a good model. They accidentally exposed that the most expensive bet in tech history was built on a cost structure that didn't have to exist. If this changed how you see the AI race, hit like and subscribe for the breakdowns everyone else is too scared to publish.